So good evening, everyone. Thanks for being here. Moto wants to rock. Hope everyone had a good evening. Good evening so far. Tonight, I don't have anything particularly planned. I was just going to do more of a market review, kind of talk about the things coming up, but we can take this anywhere you guys want tonight. So if you have any questions, anything I can help you with, please feel free to ask. Let's take a quick look at the technicals of the charts here, and then we'll kick in. Hey, Phil, you too. Hope everyone has a great 2021. Kevin's trying to learn some spreads. Well, we can talk about spreads. Let's take a look at these technicals here in the chart first and take a peek at what might be setting up. Now, just about anything I say or do could change here in the next couple hours. We're going to have those returns in from Georgia. I don't know how the market's going to respond or react to that. Right now, the futures are flat. They're just bouncing around the flat line, not doing much anything. They'll go positive. They're just bouncing all over the place, waiting for these returns to come in. I'm not exactly sure how the market will react. So let's take a look, and hopefully you guys were a little bit careful on how you traded today, not overloading in these positions. Take a look right here in the diamonds. We have this nice little pattern here where we held on. The bulls came back right off of that low, fought back up here, held on to that trend. But today we just didn't quite have enough energy to break through that little resistance area in the chart. So we are still in that place where we could have that failure come in here. And that's why I was kind of being very, very cautious here today on how I traded. And it is, well, a little bit of a conundrum here because we don't know exactly how the market's going to react to this election. And honestly, you could build a case whichever party wins, either bullish or bearish. And I have no idea what the market's going to come up with on that. So we could see about anything tomorrow morning. But just kind of taking a look at that, you can see we're right at that point where we could push right on through. Those bulls could take over, push right on through, recover that support up here, and start heading on up to new highs. We're also right at that point where we could get that failure. And that failure comes in and drops us down. And if we were to take out the low here the other day, on Monday, that would be a major problem for the market. Okay? That would break this trend, and that could cause some trouble here overall. So watch that closely if that were to occur. Let's hope that's not what's going to occur. Let's take a look at the SPY. SPY also just right there. We had that attempt to push us back up through this resistance. We just couldn't quite get it done. So watch that carefully and closely and see whether or not we can break through on this to the upside or if we turn lower in the market. If we look at the NASDAQ, very much the same picture. We're holding up in this trend, but we're pushed right into that failure of that little support. Pushed right into that resistance where we could go either way. So watch that closely. And then last but not least, IWM tried to recover today, but this has technically moved into a bit of a downtrend. We've created that lower high right in here, where we actually created a new low in that chart. Recovering, we're going to have to get above this resistance, get above that downtrend to resume any uptrend. Okay. You know, Jojo, there's so much in the political thing right now happening. It's just hard to know. And that's one of the reasons I was being really, really cautious. I wasn't buying much of anything or doing much of anything today. Just because I am wanting to protect my capital. I don't need to trade every day when I'm so uncertain about what comes next. So just be careful. Anything is possible, and we may see some results here before we finish up today. One of the things that bothered me, today is that the VIX really should have pulled back more than it did. The VIX is holding above its 50-day moving average. And if we're really bullish, if we are going to be heading out to new highs, that's not something we would typically see. Okay, so I think the market is as uncertain as we are, or as I am here. It just doesn't know what to do with itself. Doesn't know exactly where this is going to resolve itself. And we are in that situation. We saw it on Monday, that from the extension that we have in this market, if we happen to get some kind of a bearish move, just how painful and how quick that can occur. Okay, so just keep that in mind. You have an allergy to a market crash? Believe me, one will happen. I don't know when. There'll be a correction. Don't know when it's going to happen. It may happen tomorrow. It may happen 3 months from now. It may happen next year. I don't know. I do know that we have pushed this market pretty hard. We can still push it higher. Okay? So just watch that carefully and closely. It makes me really uncomfortable that we're holding a 25 handle when the market's trying to go to new record highs. I mentioned this many times in the morning prep videos. I've never seen that. In my 30 years of trading, I've never seen the market trade a VIX above 20 when it's making new highs. And that bothers me. So I'm being extra cautious, extra careful, just wanting to protect my capital. And then if we take a look at our T2122, T2122, we rallied nicely today. We still have upside potential. So we've got room that we can go on higher if the news happens to be supportive. We also have opened the door for a big possible slide if the news isn't good. So, or the market doesn't like the news. Okay. And the absolute market breadth of the market also concerns me. We're rallying, and the market breadth continues to decline. Today, the market breadth declined. So something seems to be out of sync here. It's the same thing that I warned people of on Monday. That possibility, be careful. And I didn't know Monday was going to come that way, but it's the same circumstance. here. So we're going to have to be careful. Perhaps the news turns us bullish, perhaps it turns us bearish. Can't say which. I do expect some kind of substantial move. Okay. Took some profits. Nice. The only trade I took today was a Microsoft bull put credit spread. Here's my credit spread. I'm short the 210, I'm long the 205, and my cutoff on this is the 212.50. By the way, this is a bad tick in this chart. It never moved down there today. The Microsoft trade actually closed flat on the day, so credit spread trade that closes flat your first day is a pretty good trade. So far, no problem here with that position. And that's the only trade I took today. So, are there any questions or things that I can help you guys with? Okay, well, let's start here. What type of conditional stock option order would I place that will set my entry price, exit price, and profit target price before the market opens? David, I'm going to show you, and I'm going to have to show you quickly. Okay, because I can't... you need to get a hold of the broker. You need to talk to me during the live session here. If you don't know how to use the orders of your brokerage, you need to talk to your broker. Okay? I can show you quickly what I do. All right? But you really should be getting this information from the broker. Okay, they have people there that are there to show you, okay, what to do. Okay, so let's take a look here. If I want to place, if I wanted to place a trade, let's just use Microsoft. If I want to get into Microsoft, I'm going to pick the option that I want to get into. Let's say I go to March, see if there's anything in here that I might want to trade. Maybe this option right here. Okay, now I can choose this as an entry order. I can choose it as a stop loss order, or excuse me, an OCO, single OCO order, which allows me to set an entry, okay, and a stop loss. I can set an entry, a stop loss, and a profit target all at the same time in the trade. What I typically do, because I'm here during the day, if I'm looking to get into a position and I'm not here, I'm actually going to use a conditional order with a stop. And let me show you an easier way to do that real quick. You're going to come right here. You're going to right click. You're going to say buy custom with a stop. Okay. You can go right here to do the OCO bracket on the trade. But I'm going to come into this. I'm going to change this from stop order to market order. Okay. And then I'm going to set my criteria. I'm going to come over here to the order rules page. And I'm going to say I'm going to buy this. I'm going to give a price. Generally, what I do as a conditional order, I'm going to set it as a market order for the day if it's a buy order. Method is the mark between the center between the bid ask. I'm going to say greater than or equal to and put a price where I want to enter the trade. Stock has to move up a little bit, or maybe I'm trying to catch it when it breaks out of a resistance area. I would set that as the price for the entry. Okay, so let's say with Microsoft it's 217.88. Let's say we just put it in here at 218.50. That's the entry price. This is conditioned on the fact that the stock will rally to 218.50 or above, greater than or equal to enter me into the trade. Okay, I'm going to click Save. And then on the stop order, I'm going to find that price within the chart, the actual price of the chart where I want this order to close once it's filled. So I also change that to market, and this one becomes good till canceled. Microsoft method at the mark, less than or equal to, and let's say I put the stop at 215. There's my stop. Save, confirm send. Now this trade, or this order right here, will enter me into the trade if the stock itself goes above 218.50. And as soon as I'm in the trade, look at this, one triggers all. As soon as I'm into the trade, the stop loss drops in, and it's a good till canceled order. That puts me in the trade. Okay? Very, very simple stuff. I could also change this instead of a market order. Let's say I can't watch the entry. I could set it as a stop limit. Say I want to buy it. I want to buy this on that conditional of 218, but set a price in here that says the option has to be somewhere between this price and this price. So it's a stop limit buy order. Okay. So my suggestion is you're going to need to go to the broker, spend some time learning those orders and practice them. Okay. You need to practice setting them up in a paper trade so that you understand how to put them together. You don't want to be doing it in the heat of the moment of a trade. Okay? Don't want to be doing it in the heat of the moment. The trade in Microsoft. The trade in Microsoft was the February contracts. And it's marked right on the chart. I sold the 210, bought the 205. I got filled at $1.55 on the trade. $1.55 credit into the position. So I've got that 1/3 credit spread that I like. My cutoff on this trade is if the stock closes below 212.50, I'm going to close this trade before it turns into a big loss. Okay, so as long as I stay above 212.50, I'm golden. Do I have an annual review, and what criteria do I focus on for my review? Malcolm, are you talking about review of my trading? I review my trades. I used to do them on a weekly basis. Okay. Back when I was learning, trying to improve my trading, I reviewed all of my losing trades first. I reviewed them at the end of every week. Nowadays, what I do is I review my losing trades at the end of every month when I'm beginning to set up the next month. Okay. Making sure that I haven't regressed into some mistakes or something along that way. I do an evaluation of how I performed over the year. Okay. Set goals and plan for the next year ahead. So I don't do anything particularly fancy. I'm just constantly working to improve myself as a trader. If I find in my reviews that there's a new pattern or there's something that's developed in the market that's creating an issue for me, then I try to find a way to adjust for that. But most of the time, it's just reviewing those bad trades and making sure I didn't make a mistake, that I followed my rules, and that I'm following the guidelines that I want to follow, and that I'm reaching goals in my trading. Okay, I keep it pretty simple. So my annual review is really done at the end of every month, where I'm just kind of going through those trades, whether or not I'm progressing. See, if I wait all the way to the end, I mean, would it be possible if you waited to do an annual review and it's too late to correct? I want to be correcting more often, and that's why I used to do it weekly when I was first coming together. I would do those reviews on a weekly basis, because I was watching that very, very closely for that correction that I could make very quickly so that I wouldn't keep repeating a mistake. Okay. And then I just plan out what my goals are for the year in production. Set my rules. Well, my rules really don't change much nowadays. I'm ready to go. Okay. Let's see. Hope that was helpful. Let's see. How do I get the 212? Oh, just a second here. RK 3-8 trap, please, in regards to entry. For me, the 3-8 trap is just really, really simple. The 3-8 trap, let's look at like Merck here. Okay. 3-8 trap is really very simple to me. Okay. First, I have to have the 3 cross over the 8. And then I need to see the 3 hold above the 8. That's it. The trade has nothing to do with the 3 and the 8. There's no entry based off the 3 and the 8. There's no trade based off the 3 and the 8. I just want to know that the stock was strong enough that the 3 stays above the 8. Because in my stats, guys, when I see a trade that crosses over, if I try to buy that before it's proven support, I can only win on about half of those trades. So I avoid that. 3 has to stay above the 8. I want to be better than 50-50. So I choose to be more stringent on how I place those trades. The next thing that occurs in here has to be price action. Has nothing to do with the 3 and the 8. Okay? I have to evaluate this chart and determine whether or not this is a valid entry point for me, or if I choose to stand aside. Okay? So I have a 3-8 trap, but notice I'm underneath a resistance area that could stop me dead cold by the time I barely get a profit in the trade. This is a 3 and 8 trade, even if a buy signal shows in here. Whoops. If I get a buy signal that pops up, let me see if I can get that stupid tool. If a buy signal shows up in here, there's still no trade here for me. It doesn't fit my rules or my guidelines. Okay. The price action is what makes the trade. Okay, not the 3 and the 8. and I have to actually see the chart and see the price action before I can pull the trigger on a trade. Does that make some sense? Okay. So the 3 must stay above the 8. For me, that's how I want it to be, because my stats show me if the 3 doesn't stay above the 8, if it crosses down and crosses back up, I get chopped out of the trade. There's too much chop in that. Okay, so I need to see that stock stay up. I need to see trend. So first thing that's important to me is the stock trending. Well, what's the trend here in eBay? Trend is down. It's too close to resistance. I won't take that trade. Okay. We crossed up, crossed down, and crossed up. Crossed up and crossed down. This is chop. If I trade based on the 3 and the 8, am I increasing or decreasing my chances of success if I just chase the crossovers? I'm going to be decreasing my odds of a winning trade. Okay, but if I find those charts like I was using this as an example today, that are in a nice steady trend, I'm looking for the entry points all along this trend. Okay. This is not an entry signal for me. Okay, because it's a crossover trade. Does that make sense? Sorry guys, I'm way behind here. Below the price action. David, the stop loss will always go below the price action. Always. So for example, if I look at this chart right here and I see this nice little consolidating move, I'm going to go to a naked chart here if you don't mind. If I see this nice little consolidating move in here and I place an alert on the chart, you can see I did place an alert on the chart. Okay. Then if I'm basing a trade based off the price action in here, where should your stop loss be? Stop loss is going to have to be underneath this price support. That's where the buyers came in. That's where they proved support. Okay? And that's why I can look at a trade ahead of time, say, I would like to enter in here, place an alert, and I can find out whether or not this is going to be an acceptable trade before the trade ever triggers. I can be ahead of the game. I can say, I want to enter this trade here. Stop loss is under here. Is that an acceptable trade? And I can do that ahead of time. Okay, I can plan the trade ahead of time. Okay, so stop is also based upon the price action of the chart. I know a lot of folks want to just have that perfect mechanical system, you know, like the volatility stop. That the volatility stop is going to tell you where the stop loss is. Sometimes it does. Notice right in here that the volatility stop said your stop loss should be right under that area. Okay, but sometimes we'll find that the volatility stop misses that beat. There's too much volatility and there's a big long tail down here. Okay, if there's a big long tail down there, I have to respect that price action. RK, no, I place a hard stop. Okay, and the reason is, well, think about this. I just gave you my rules here. I'm going to plan my entry, and I'm going to plan my stop, and I'm going to find out if that risk is acceptable. Okay? If I don't have a hard stop, how can I plan that trade to my stop and understand how much risk there is into it? Now I can place an alert, hope to catch it. Okay. But how many times have you guys done this? You place that alert, and I know this is a problem for me. Stock gaps down and moves down through that level real quickly in the morning, and you say, it'll bounce back up. It's got to bounce back up, and you don't take the stop out. How many of you guys have ever turned a short-term swing trade into a really bad long-term hold because you didn't take the stop? Okay, so for me, it has to be mechanical. Okay? It has to be mechanical. I have to have a stop in there. You guys know that the kind of things that I do, teaching 2 hours every day and that kind of stuff, I'm often not looking at my brokerage account most of the day. Okay. Frank, yes, you can use theoretical price to get a close estimate, but it's not perfect. And what I mean by that theoretical price will give you a close estimate in here of what the actual dollar amount will be. But just know that's all it is a close estimate. There's no calculator out there that will give you the perfect price of an option at a specific price of the stock. And the reason that is pretty simple. Volatility's changing. Okay, time is passing. All of those things are occurring. All of those Greeks are in constant movement. Okay, so there's no Black-Scholes model that'll give you the perfect number. Okay, but you can get really close. Okay. Don, yeah, I just showed you how to do that with a conditional order. Use conditional orders, and you can place those orders based on the price action of the chart itself, not the option. Okay. So, and if you're a Thinkorswim user, go over and find out, just ask the broker, how do I use a conditional order? Or ask me tomorrow in the room, and I'll be happy to give you guys information on that. David, yes, I do use an account size. I try to size my trades pretty close to the same on my trade size. Okay, when I use options, I take my account value, whatever my account value is. I take it times about 3% or 4%, and I base my trade size somewhere between there. Okay, that's not my stop loss, that's the size of the trade. Okay, I base my stop loss on my tolerance for risk. How much can I lose and be okay with it? Okay. It's a dollar amount. It's not a percentage. I know Rick likes to use percentages. I don't. In fact, the percentage stop loss doesn't make any sense to me because all stocks are priced differently, right? Would you guys say that a stop loss on an option can easily be more than 20%? You can take more than 20% on a loss. And that's easy to do, right? For a stop loss on an option. Yes? Okay. So let me ask you this. If I have a 20% stop loss on a stock that's $65 a share, and a 20% stop loss on a stock like Amazon that's $3,500 a share, 20% is a big difference in price, right? I might be able to accept a 20% risk on a $65 stock. I am not going to take a 20% risk on a $3,500 stock. The dollar amount is too large. That's why I have to know what the dollars are. Okay? Yeah, like Barry says, 13 versus $600. Okay, that's a big difference. So I have to know what the dollars are. My bills come in dollars, not in percentages. That's why I have to know that. That doesn't mean you have to do it the way I do it. That's the way I have to do it. I have to have an understandable number to base my stop loss on. Okay, does that make sense? Because I've never had a bill come to me to my house that say I only owe a certain percent of that bill. Okay, they don't send them to me in percents. They send them to me in actual dollars, and so I need to plan that for me. Let's think about this, guys. How many in here have the desire to make a full-time living, to make a living as a trader? Okay. Now let me ask you this. Each and every one of us has a dollar amount that we're required to meet our bills and to get through the month, right? And that's a dollar amount, right? It's not a percentage. Right? We have a certain amount of capital that is required for us to make that month work for us, right? And a percentage doesn't do that for me. A dollar amount does. That's why I work for dollars. Okay? See, that's pretty, anyone who tells you that they're trading their full account in the market, trading options, is either they got a screw loose or they have a death wish. One of the others. If you ask most people in the room, in fact, let me ask that question. How many of you ever have more than 50% of your account in the market at any one time? Okay. Now I'm talking about your options trading capital. I'm not talking about your overall capital, something that you might use for stocks or anything else. I'm talking about your option trading capital. If you're putting that much money to work in options utilizing leverage, you're always going to be off balance. You guys understand that? You're always going to be emotionally unbalanced because you've got too much risk hanging out there. Now, Gwen, yeah, if you don't trade options, there's some different rules that you're going to follow, right? You can have a bigger percentage because you're not leveraged. Okay? Let me take just a second to describe this, guys, and I think this is important to understand. One of the things that happens when people start trading options is they get into this idea that, and this is a really goofy idea, okay, that I trade options, I don't trade stock. Okay, let's think about that for just a second. When you buy an option, geez, I gotta get some sleep. When you buy an option and you're looking at that trade, remember that in that option position, you have a depreciating asset. Right? A certain portion of that option price will be at zero at expiration. If the implied volatility is high, it could be as much as 40%, sometimes even more, of that option will deteriorate to expiration. It's a depreciating asset. Okay? When you buy stock, we actually have an asset. Now, stocks can go to zero, we know that. All right. But if this is a 3-month option that you bought here, and that stock hasn't done much in 3 months, what do you got left at the end of that contract? Little to nothing, right? If you have the stock, you still have value. Okay, so why do we trade options? We trade options for the cash efficiency of leverage, right? We trade options for the cash efficiency of leverage. So when I look at an option trade, it's the same thing. I would choose to trade this as a stock. Okay? It's a stock trade. Because remember, the option is tied directly to the stock. I make a decision that I'm going to exchange the stock trade for the option trade for cash efficiency. Okay? I know that what comes with that is the tremendous leverage and the fact that I just purchased an asset that's diminishing. Okay? So don't get caught up into this idea, okay, that just because you choose to trade options, that you can never trade a stock, or that it's stupid to trade stock. No, that's not the reason. Do you guys know that the original purpose for options even being created is to hedge risk? It was never intended, was never ever intended for speculation gain. It was to hedge risk. That's why Black and Scholes won the Nobel Prize. It helped institutions hedge this massive risk that they had out there in the market. Okay? So we trade, we make a choice. I'm going to trade the option instead of the stock for cash efficiency, but I would trade the stock anyway, even if there wasn't the option available, because the signal is there to trade the stock. Does that make sense, guys? And because we're buying a depreciating asset, we have much more risk trading options, correct, than we do stock. And that's why most people who trade options trade smaller positions with options than they would maybe in a stock trade, dollar-wise size. Okay. And we don't put all of our eggs into that basket because we can quickly lose it all if we do that. All right. This isn't a video game. And too many people are treating options as just this is a video game where I can just get rich quick. Guys, I'm telling you, that's not why options were created. And if you trade them that way, you're going to be in serious trouble really, really fast. Okay? I've seen too many people. In fact, I've actually worked with a current member that came to me the first time in a coaching session, and he had a loss that was over this, guys, in one trade. One trade. This was a loss. Because he hadn't been told, well, if you trade 10% of your money into a stock trade, use that same 10% to buy leverage into an option trade. Stupid, 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 stupid. Actually, this person has become a tremendous trader. You guys know who it is. I'm not going to give you the name, but he's a tremendous trader. When we corrected some of these problems, I asked him, I said, well, if the size of position that you're trading over 200 and I think it was over $270,000 in stock value. I said, would you trade that in stock? And he, well, no way. I can't trade that much in stock. I said, then that's what you're controlling here. Why would you do that? And they'd never even thought about it that way. Well, it was only 10% of my account. Okay? Bad mistake. Trade smaller position sizes with options. We're taking higher risk in the trade, and we have to understand that risk. Okay? Or we end up taking those giant losses. Okay? And believe me, guys, I've done it. Okay? The biggest loss I've ever taken in my entire life was a credit spread trade. A credit spread trade where we were working in a position, a credit spread position that had a 90% chance of winning. You know what that meant, guys? Had a 90% chance of winning. That means that I took a trade that only offered about 10 cents a share in profit. How do you make that work? How do you make that pay anything? Anyone want to wait a whole month for 10 bucks? So how do you make that work? Trade 150 contract spreads. That's how you make that work. Stupid, stupid, stupid. Biggest loss I've ever taken was what most people think is a conservative trade, because I didn't know what I was doing. And I took too much risk. Okay? Thinking I was doing the prudent thing, the smart thing. Oh, this is really common, guys. A lot of people do this. 150 contracts. So I was short 150 contracts, long 150 contracts. I had a 300 contract trade on an index with a 90% probability of winning. Guess what happened that 1 month when that went against me? Yeah. Had 6 months of wins. 1 month just about broke me. Okay? Don't overtrade options. You have to know the risk. Don't put all of your eggs in there. It's a high risk game that we're trading, and it's not a video game. Don't gamble in here. Okay? That's right, Malcolm. Don't gamble. All right. Here's the other thing that I think is really important that a lot of people forget about. You guys ever gone to a casino and looked at a roulette wheel and they have black and they have red, right? They have black squares and red squares, and they're equal. There's an equal number of black squares and red squares, right? People falsely assume that they have a 50-50 shot at winning. You ever seen anybody standing at a casino watching the tower on a roulette wheel? Well, 5 blacks have gone in a row. It's got to be red the next one. That's gambling big time because it's completely random every throw. Absolutely random every throw. Okay? And here's the other thing that they forget. That they have slots on there that are a 0, the green slots, and a 0, 0. Okay? Now, the same thing is really true with the market. So it's not just red and black. You don't have a 50% chance. That's right. It's always in the house's favor. Let's think about the odds in an option. Okay? People will think, well, if I buy an option trade, I have a 50-50 chance. Okay? If we buy a call option and the stock moves up, we win, right? If we buy a call option and the stock moves down, we lose, right? 50-50 chance. But you're forgetting something. If the stock doesn't move, what happens? If it goes sideways, what happens? We lose. Okay? So we have to remember that it's not a 50-50 game that we're playing. Not only do we have to be right on direction, we have to be right on the timing. So we give ourselves enough time to be right on the trade. That's why we do good technical analysis. That's why we trade patterns. Okay? That's why I want to trade a trend. Right? If the stock is trending up and I'm entering into a trade, into a trend, am I increasing or decreasing my odds of success? Right. I'm increasing my odds of success. If I avoid trading a super volatile stock that's trending to the upside, am I increasing or decreasing my chances of success? Increasing. That's why I avoid highly volatile stocks. I avoid them because I'm just decreasing my odds of success when I'm trading options. Why am I so picky about the trades I take, that I take low risk entries, that I take planned risk entries, where I enter a trade with a relatively low risk in the position? Because even if I do the best trading I can, following my 3/8 trap, I know I'm still going to lose about 30% of my trades. I know it. It's going to happen. Okay? So I have to have a planned trade. And I have to have a planned trade that keeps me in a range that I can recover from. Okay? I can't have that trade turning into a giant loss. Think about this, guys. If you take a 50% loss on an option trade, and you normally take 20% wins to the upside, that's your profit target. How many winning trades do you have to be exactly right on just to break even? So we can't take trades that offer us giant risk, can we? Or we'll never make our trading work out. It won't come out in the end. I'll tell you, I've said this before, and I'm going to keep repeating this over and over. When I work with people individually on their trading, do you guys know that most people that hire me to help them with their trading tell me from the beginning, I win about half of my trades and I lose about half of my trades? Okay. You know the quickest way to get people to profitability? It's not a new system. It's not a new indicator. It's not a new scan. The quickest way to profitability is finding out what's creating these losses and try to eliminate some of the mistakes that they're repeating multiple times. Because all we got to do is prevent 2 or 3 of those trades from ever occurring. And all of a sudden, we're a winning trader. It's not your entries. Well, sometimes it can be the entries that are the problem. Okay. But it's correcting the problems that continue to provide you those losses that makes the biggest difference. I can take losing traders, and by reviewing their losing trades, help people get to profitability faster by creating rules that prevent them from repeating that mistake again, over and over and over. Okay, we have to fix those. Now, taking profits is a whole nother thing, right? One of the reasons that people have a low win ratio, even though they say, hey, I picked good trades, it's initially up, but then it turns into a loser, is because they fail to take profits. Those two things together keep most people as losers in the market. Failure to take profits and failure to correct mistakes that they're repeating over and over and over. Okay? That's what'll get you there. Okay? Let me go back and look at some more of these questions. I want to help as many as I can here. Let's see. Gwen's a gambler. I got to go back a long ways. Here in that. Kevin, that's how my wife spells divorce. Yeah, big losses like that, big time. Phil, I apologize. I'm not really sure what you're talking about in that comment. Um, I think I have just a little bit of a clue, but and this is something that is kind of near and dear to me on this. If the market is trending up, is it wise for me to trade short? No. Trade with the trend of the market. It's easier. Move with the direction of the market. Move with the direction of the stock. Don't try to counter trend that. Trade that. Now, what I will do is I will put on short trades around that long position to hedge the position. Okay, I do that all the time. But I don't trade short at the same time I'm trading long. As a general rule, if the market's trending up, I generally want to be trending up with the market. I want to be trading long. Okay. Rising tide lifts all ships. Okay. When the tide is going out and the market's going down, it's the easiest time to short. Don't be long that market. Be short that market. Okay. Thank you, Malcolm. It's an even race so far, huh? Dow futures are down 20 points. ES futures are down 7 points, so pretty darn flat. Remember, tomorrow, guys, we have the FOMC. That'll be out tomorrow. 61% reporting, and they're pretty flat. That's interesting because it's really hard for those percentages to change a lot if they're that close. That's a loaded question, Phil. I can't tell you for sure. I don't know what's best. All we can do is trade the reaction of the market. Malcolm, you might be right. The better trade is to is to find a law firm that you can buy some stock in. Or the transportation company that's going to take them there. Chuck, the vast majority of my trades are directional trades. Okay. The vast majority are directional trades. However, it changes all the time. Okay. When I have a directional market and I've got consistent price action, I just tend to trade directional trades. Okay. I make more money doing that. Okay. But when the market is uncertain, when we have lots of volatility, I usually pull back on my directional trades and I trade more spreads. Okay. Because I don't have to be as accurate on direction and timing with the spreads. Okay. So when I get that really high volatility of the market, I will often trade more spreads than I normally would because I'm hedging that directional risk. Does that make sense, Chuck? So my trading adjusts with the market condition. Okay. Lately, I've been trading quite a few spreads. Not tons of them, but trading a few more spreads than normal because, well, let's say going into the holiday, I had all of my trades, the actual trades are long trades. So I had several trades that were long trades, and I wanted to hedge that risk. Didn't want to take them off in case the market was trending up, stocks were trending up, but we had volatility. So I put on bear call credit spreads in some of the indexes. Put on a bear call credit spread the other day in Google. Okay. And the whole purpose was to hedge the risk, to reduce my delta position. Okay. So if the market got that volatile move to the downside like it did on Monday, how many of you had winning trades on Monday? I closed a Diamonds bear call credit spread for 51%. Okay. B12, 49%. Perfect. Because I had that hedge to that downside move. Make sense? So when the market's volatile, I tend to do more credit spreads, more of the premium selling. And for example, every single one of my long positions that I have are hedged trades. I'm holding long stock in XLF, and I'm short the 30 strike calls. I'm holding the March 26 long options, and I'm short the 30 strike calls. Okay. So I'm hedged in those trades. I'm long in space, a long-term position in SPCE. And I'm short. In fact, I just rolled that short for another profit the other day. Rolled the short. I think it was Monday. Rolled that short to bring in a profit. Okay. And add some additional premium to hedge the trade. Okay. So even though I was mostly long, I had those long trades hedged as well, reducing my directional delta position. Does everyone know what I mean by that? Reducing my delta position? Okay, good. No, delta's not a spread, Don. Delta, if you own a 70 strike call option, okay, or not a 70 strike, a 70 delta call option, okay, probably about a 70. Um, well, you got about a 70% chance of winning on that trade. That 70 delta option. That means that you're plus 70 deltas. Okay? If you own 200 shares of a stock, now you've got 270 long deltas. Okay? If I sell an out of the money 30 delta option against these 200 shares and against this position, I bring in 90 negative deltas, reducing my long risk in the market. Okay? So what I'm doing when I'm selling these premium or premium against positions is I'm actually trying to reduce my long directional risk in the market. Or it can be my short directional risk in the market. Okay? Make sense? So if you have, let's say you have in your portfolio, you add it all up and you got 1,000 deltas long the market, how do you lay off some of that risk? Well, if you were to buy 200 negative deltas, you've reduced your long risk by 20% in the market. Now you can do that by buying puts, you can do that with spreads, you can do that with a lot of different things, but bring in that negative delta so that you're reducing this overall 1,000 risk long. And that's how institutions manage their positions. They reduce their risk to the market by hedging their position. Okay? Make sense? Makes sense. And all you got to do is just add it up. If we do let's look at that Microsoft. If we were to do a bear call credit spread and we sell this option right here and buy this option here, okay, I sold one for 30 deltas, I bought one for 24. This has a result of reducing my overall delta position, right? Yeah. It doesn't reduce it a lot, but it reduces my delta position. In the market. So I can reduce that risk for a long move. So for example, on Monday, I had a bear call credit spread on the Dow. The Dow moved down 600 points. My long positions were down, right? My long positions pulled back. Now, none of them pulled back bad. I was lucky. I had XLF, I have Walmart, I have Space. None of those pulled back hard. Okay. But because I had that trade that was hedging my delta risk for the downside move, I was able to take $1,800 in profits yesterday because I had on some downside delta. Make sense? Yeah, I closed it midday when we were down there around 30,000 in the Dow. Okay. Capturing that gain. And if you guys were followed my other trades prior to the holiday, I closed the Google bear call credit spread for a profit. I closed an IWM bear call credit spread for a profit. Because of the volatility of the market, I got those nice little profits on those trades, and it hedges any kind of risk that I have overall. Okay. Now today I added some risk, right? Because on Microsoft, I did the February bull put credit spread. Okay. I sold this one and I bought this one. Now, if I sell this one and buy this one, am I adding long delta to the market here? Yep. I've just added long delta to my position. I've just increased my delta risk there, but only marginally, right? I didn't take a straight up directional trade. Okay. Don, not necessarily. If you have very little risk of being assigned, you can hold them through expiration. But I'll tell you as a general rule, I don't. And particularly when the market is volatile like it is. If you look at most of my credit spread trades lately, I'm taking them off somewhere around 30% profit. Between 30 and 50% is where I'm just taking them off and taking the profit. Okay. So as a general rule, when the market's flipping around, it's kind of volatile like this. Man, when that profit comes in and I've got, well, the simple answer is, Don, are you going to go broke if you're taking 30, 40, 50% gains on a trade? No. So when the profit is there, take it. Don't get greedy, take the profit. One of the reasons that I run a pretty good win-loss ratio, in fact, it's been a long time, guys, that I haven't maintained about a 70% or better win-loss ratio. I win about 7 out of every 10 of my trades. One of the reasons is because I trade for a goal. Okay? I know how much I need to cover my month, to make money. So I work a plan to cover that. Does that make sense, guys? Awesome, Christine. Awesome. That's great. And so let's just say, for example, you need, you know, you want to be full time and it's going to take you $3,000 to cover your month. I don't know what your bills are or whatever it is. You know, I know some people have house payments bigger than that. But let's say you've got 3,000 to try to achieve. Okay, so if you've got 3,000 to try to achieve on the course of a month, how much do you need to make a week? Right. You need to make about 750 a week, right? So if you know that ahead of time, this is what you're working for all week. At a minimum, right? We can do better than this, but we want to make 750 if we can. Okay? So when I sit down at my desk every single day, I have a piece of paper in front of me that says, this is my annual goal. Okay? And I have a number there. This is my monthly goal, and I have a number there. This is my weekly goal, and I have a number there. That sits on my desk every day. I'll show you a paper version of it. I give it out in the 3/8 trap class. Wrong PDF. Right here. Every Sunday I fill this out. Okay, sits here on my desk. I know what my annual, my monthly, my weekly, my trade size, and how much tolerance I have to risk. I do that every Sunday because I know that if I have that in front of me, when I sit down, do I have a purpose when I sit down to trade during the day? If that's in front of me and I know my goal is 750, am I just winging it by being here? No, I have something that I'm working toward. I have a purpose, not just to be active, not just to be busy. This is what I'm trying to find in the market, 750. That's what I'm trying to do. This is my total focus until that is covered. Once that's covered, if I find more money in the market, hey, great, that's gravy. That helps with next week. Okay? That's what I do. My focus is on my goal. Make sense? Let me ask you guys this. This is a real simple question. Okay, if you want to be a full-time trader, if you want to trade for a living, are you going to be able to do that if you consistently miss monthly goals? No, you're not going to make it, right? Your wife's going to kick you out of the house and say, go get a job, buddy. We're not paying the bills. Right? You have to prove with some consistency that you can do this most of the time. You're not going to hit it every time. Sometimes you're going to go way over. Sometimes you're going to lose. Okay? But we have to come up with a track record if we're going to prove our success that we can be in this business full time. You know, and that's a good thing to know, isn't it, Barry? Hey, I slipped this week. I better step up. I got to do a better job. I got to stay more focused. I got to be more attentive to the trades. Okay, and that's what having a goal does for you. I trade for my goals. If I can beat my goals, awesome. But I trade for my goals. I have to. I do this for a living. I have no other choice. My bills come every month. I have to trade for my goals. Make sense? Now, when you're first starting out, guys, Don't set your goal up there to, yeah, hey, tomorrow I want to start being able to reach my whole monthly goal. If you've never done that ever before, don't set your goal so high you have no chance of hitting it. Set something in there that's reasonable. Okay? Put yourself in a position where it's achievable, something you can do. Let me ask you guys this. How many in this room right now, if you could consistently make $100 a week, every week this year, that'd be the best year you've ever had? Okay, for all of you guys that answered yes on that, how many of you guys have had $100 wins in trades and didn't take them? All of you probably have, right? So if you know that this is going to change your life, if this is going to change your trading, shouldn't you be making this a goal? I didn't say $100 a day, Don. I said $100 a week. $100 a week for some folks would double their accounts. Okay. So set a goal and trade for your goal, because guys, I got to tell you, it feels absolutely fantastic. How many in here are doing this, trading for a goal, and last year you hit most of your goals, or you exceeded your goals, and you had a great year? Game changer for Rob. Okay. And I'm telling you guys, it's the focus to the goal that makes the difference, right? Because you get comfortable with taking that profit. Hey, that's what I'm here to do. Make $100 this week. I need to take that profit. Because it doesn't matter what happens the next day or the day after that. If you don't take that $100 gain, you could lose it tomorrow. How many of you have had a $100 gain on a trade, particularly in a volatile market like we've had? You've had a $100 gain, go to lunch and come back and that $100 is gone. It doesn't have to be overnight, right? It can be yesterday. That's right. So what's your responsibility? If this is going to change your world in trading, what's your responsibility when you see that $100? Take it. Because it's not your money until you close that trade, right? You have to close that trade to capture that gain. Take it. If that was your goal, man, it takes the pressure off, right? I made my goal this week. Now I can be real picky the rest of the week. I might find another trade that's going to make me $100, but I can be picky about it. Real picky. We have to get comfortable with taking those profits. That's why I trade for goals, guys. You ever seen that person on social media or somebody that puffs up their chest and I get 100, 150, 200, 300% gains? You know what I usually do, guys, when I see that and they're bragging about that? I say, great, that's fantastic. Congratulations. Do it again. See, it's pretty easy to repeat a $100 win, right? It's not that hard to find something that'll make you $100 in the market. It's hard to repeat that home run trade. How many times are you going to hit home runs, guys? Stop swinging for the home run. Start taking those profits consistently, and you're going to find your trading improve. Okay? Get comfortable with taking profits and trading for your goals. That will make a massive difference. And honestly, it's the only way you're ever going to be in that position that says that I can do this full time for a living. Right? Let me ask you this. If you take the next year and you reach this $100 goal week after week after week, almost every week throughout this year, you had a few misses, you had some losses sometimes, but you added up at the end and you made your $100 goal. Does your confidence improve or not in your ability to trade? Confidence improves, right? So what's the difference between making $100 a week and $200 a week? It's the same trade, right? It's the same trade. Instead of one contract, it's two contracts. And now you're making $200 a week. If you build confidence that you can do this consistently, it's just by scaling up. Okay? For my longer term holds, Judy, it's very different. I do have goals that I set, and it's going to be different based on dividend yield, things like that, covered calls, whether it's a stock trade or a long-term option trade, what I'm trying to achieve there. Okay, you guys have seen me, I will say, okay, I'm entering this trade for a long-term trade and I don't expect anything great. The sell-off started up here. I just want it to come back about halfway. So I have an idea where I'm shooting for. Okay. So it's a very different thing when you're talking that long-term hold or long-term stock position. Okay. So if you can get comfortable making this consistently, all we have to do is start scaling up. Don't have to change anything. Just scale up. And by the way, guys, don't be ashamed. If your number is $50, $50 a week will change your trading world, then start working for $50. Work for consistency. Put that down on a piece of paper on your desk and stare at it every day when you sit down. What am I here to do? I'm not here to chase around or chase every stock. I'm here for this. This is what I'm here to do. This or better. That's what I'm after. Okay? Let me ask you this, guys. If your goals are somewhere between, if your goal is 50, if your goal is $100, how many stocks do you really need to have on a list to make that happen? Yeah, you don't need to be chasing around everything that's popping in the market today, do you? What you need to be doing is finding that good, consistent, quality trending stock and just waiting for the next trade to make your 50 to 100 bucks. And have a list of those. Okay? So that you're working out. There's always going to be a trade. Not for me, Christine. You guys saw that the other day. I bought FCX. Okay, and FCX shot up here. And by the end of the day, what did you guys remember what the profit was? I don't remember. I can't remember what it was. It was a nice profit. I was heading 20%. Thanks. It was a nice profit. I was heading into the holiday. I just took the profit, closed the trade. Yep, base hit. I trade for my goals. I don't trade for the greed. Okay? Because here's the thing, Christine, and this is something we all know. If I close that trade, that money is mine. You guys still have sound? Okay. If I close that trade, that money is mine. If I hesitate and that stock did this the next day, it's all gone, right? I missed my opportunity to take that profit. And it may never come back. Okay. Like JD did today. Take the profit, right? Close the trade. Winner, winner, chicken dinner. They can't take that money back. It's now in your account. So when I hit goals, I take those goals. Hey, that's awesome, Phil. That is awesome. Congratulations. Feels good, doesn't it? Feels awesome to see that progress because we have a mechanical system that we're following. Okay? Just keep up that hard work, keep that pressure in there to just keep doing that, and we're slowly working to scale up, and it just gets better and better and better after that. Can change your life doing that. Okay. All right, guys. This went a lot longer than I expected it would, but kind of got into it. So I hope that was helpful for you and why I do what I do. Now, that doesn't mean that what anybody else does, if you use a percentage or whatever, if you made that work for you, fine, keep doing it. Okay? This is what I do because it just makes sense to me. If it doesn't make sense to you, figure out that plan that makes sense to you. Okay? You have to have a plan. You have to have a guide. You have to have rules that you follow. That's what makes us a successful trader. Know what it is you're here to do. When you sit down at your desk tomorrow morning, what am I here to do? Okay? None of us are here to take one or two trades and then stare at that chart wiggling around all day. I don't know anybody that signed up for that as a trader. You know what? I'm going to sit here and incessantly stare at my brokerage account and watch that tick around all day long. That'll drive you nuts. What are you here to do? Be focused and disciplined to reach those goals, and everything changes. It's way easier to trade that way. Okay? Y'all take care. Have a great evening. We'll see you bright and early tomorrow morning. I'm up at 5 o'clock, so heck, it's about my bedtime. Thank you, guys. Take care. Have a great evening. What's left of it, and I will see you tomorrow morning for the morning market prep. Take care. Good night, everyone.